that growth figure, 4.8%, I think the market was looking for around 4.2%, so a slight moderation, but it looks like manufacturing really powering ahead.
Yeah, certainly had it not been for that towering growth rate of about 14% for the manufacturing sector, the rest of the economy was actually looking a trifle ill. The financial sector accelerated growth over the fourth quarter, so did the trade sector, but neither of those would have been enough by themselves to hold overall GDP growth at the fourth quarter's 4.4% growth rate. So we certainly are highly indebted to the manufacturing sector for the above expectations rate of growth.
Of course, we know the manufacturing sector growing strongly from a low base, so we've had the vehicle sector bouncing back quite nicely. Can it continue to sustain the economy, though, going forward?
I think there's going to be a bit of a short-term hiccup because of the earthquake and tsunami in Japan, which is going to come to visit our domestic vehicle assemblers and indeed the vehicle aftermarkets trade as well. So in the ultra short term, I sense some danger. However, the motor sector hasn't been totally overcooked. Even though it did get some unexpectedly good numbers out of the first quarter. So it could be, as long as interest rates don't go steaming ahead, it could be a source of growth for 6-9 months to come.
Well, give us your outlook on interest rates, because here we've got a growth figure that looks a little bit better than expected, though, as you said, because of that manufacturing sector. We had private sector credit extension starting to accelerate a little bit, still not very high, though. Do you think this points to interest rates going up sooner rather than later?
I've been something of a hawk on interest rates for the second half of 2011. I still think we could see 2 50 basis point moves, probably September and November. I think we're going to escape July.
Would you call this steaming ahead, though?
No. This is an orderly increase in interest rates in line with an economy that is not exactly falling apart because of excess demand. On the contrary, domestic demand is quite subdued. So I guess the Reserve Bank will, if it moves rates, be looking at the picture 12, 18 months ahead. And if inflation is flirting with the top end of the target band, which the Reserve Bank is anticipating will happen by the fourth quarter, I've got a feeling that that is going to be too tempting a signal for them to just sit and hope goes past without any action on their part.
And we're also talking about a normalization of interest rates, because at current levels, interest rates are ultra low at this stage. And we're talking about globally a normalization of monetary policy. So how many more increases would we have to get to that normalization?
I think because of the ultra low rates, we would expect the world to normalize first, and that might then dictate what kind of increases South Africa needs in order to stop a wholesale outflow of capital from South African money and short-term capital markets. As a result, if we see 1 or 2 percentage points up for world rates, global rates, in the next upward cycle, which is quite conceivable, then I reckon our cycle will take us up by a similar amount, plus maybe 50 to 100 basis points. So if the world moves by 2, we'll move by 3.
Let's go back to those GDP numbers, though. So we talked about the manufacturing sector being driven by the vehicle sales. Mining up 1.8%, finance, as you pointed out, up by 4.8%, agriculture down by 2.6%. So not looking very healthy outside of the finance and manufacturing sectors.
You're quite right, Stephen. And as a result, I think that those particular results might be the final nail in the extreme hawks argument about a potential interest rate increase in July. I know such extreme hawks are very, very much in the minority, but there have been some thoughts about a July increase, although whispered rather than spoken about in loud or assertive terms.
Don't these extreme hawks then threaten to choke the growth that we are seeing in the economy at this stage?
That, I think, is particularly pertinent given today's results that were pretty poor if you take the manufacturing, finance and trade sectors out of the economy.
Let's go forward to this afternoon. We have that trade balance coming out at 2 p.m. 1 billion rand surplus we had in March. Of course, these numbers are quite volatile.
Yes.
Would you expect us to continue surprising to the upside with our trade balances?
I think so, particularly given the levels of GDP that we saw coming out today, and if there's any measure of real demand to be read into the money supply and credit creation numbers. I think that whilst we always have to protect our rear ends with those trade figures, anything is possible this afternoon, but really the economy is not in a strong demand environment that could by nature swing the March figures as we move into April. So yeah, watch the space. Anything can happen simply because about 80% of the movement from one month to the next in the trade figures is pure noise.
You said anything can happen this afternoon. We're also looking forward to that competition tribunal ruling, and that has big implications for South Africa. Do you think we're going to see this deal coming through with conditions and that it will go ahead, Tony?
I think that there are likely to be conditions in any acceptance of the proposed deal by the Competition Commission. Whether those are then acceptable to Walmart remains to be seen. And therefore, even if the Competition Commission does give the nod this afternoon, but attaches conditions, I think we then have to wait for a Walmart response before we can finally say, yes, the deal's going ahead.
But do you think we might already have tarnished our reputation a bit as a destination for this FDI that we so much want?
It's been a very, very weird performance by government over the past couple of months in relation to the Walmart's application or stated desire to come in and establish a base in South Africa. And to my mind, it does signal a bit of a swing in ideological balance from the South African government and the way that they talk to foreigners and try to attract them into the country.